Jeff?
Not particularly. I mean, it's. I think I don't think it's a time for heroes. Like Uber, I thought had a terrific quarter. I just sent in a bunch of graphs at the last second. I'm just kind of looking at the risk reward from what we saw from um, spot. Well, I don't want to leave it on the table, but I mean, it's you're just seeing reaction. The risk reward is just a nightmare. It's if you get a huge beat or really good quarters, you lost 10% at one point. Uber was down yesterday. I spent a decent portion of my day trying to figure out what the sweet hell they said that was wrong. And it came back and it bounced, but there wasn't a damn thing going on. They from a management perspective, they look great. The chart actually is not horrible, but Spotify, I love Swedish Netflix. And another company where it's just like, they're investing their money in the business, soft ad sales. That should surprise people. Why? It's in this economy. You would expect an ad hiccup, but I don't want them to run their business for quarter to quarter ad maximization. I want them to do exactly what they're doing, which is completely developing their programming and I mean, they have a hammer lock on that business. Netflix could dare to dream to have a monopoly like Spotify's, and that stock got destroyed. The chart broke all to hell. It's a good company just rolling over, so I'm looking at the rest of the week. It's what's Dutch Bros gonna say? What are they possibly going to say? That stock's down 30% since they beat the living crap out of earnings. They grew revenue 28% last quarter. Are they going to do better this quarter? Probably not. They're at 7% comps. They look terrific. That's probably not going to happen again. And even if it does, people will sell it. Starbucks got a great offer on their China assets, which reduces the China risk. China's been a sinkhole for them for years. I didn't expect that stock to roar on that news. I didn't expect it to go back to near 52-week lows either. It broke an 8 handle yesterday, got back to the 70s. It's like, do I want to catch that? Do I want to deal with kind of that lingering turnaround? Chipotle didn't bounce at all. It's just kind of a little sloppy out there. I'm just trying to figure out what to make of it. And and if there's a sign of weakness, holy crap. You're just taking a 5-iron to these stocks. Like you say, Viking seems fine, but look at the entire cruise space is just sinking. So it's a little gross when you stop paying 1 million Americans just because you've decided to throw a little tantrum and shut down the government. Turns out that reduces spending. Are we even on yet? Because I'm kind of leaving A material here. That's all I have to say.
We're on, but we haven't started.
Thanks for having us, folks. Back to you in the booth, Keith.
Yeah.
What is Viking Cruise Lines?
Oh, VIK. I'm retweeting and
VIK.
Yeah, sorry.
Not even the glorious Vikings triumph.
Yeah, but see, that looks way better than the other two. Way better.
Infinitely better, but mostly because they haven't opened their mouth yet. They talk on November 18th, and they'll say, business is good. Bookings are strong, and the stock will sink 40%.
Sell the news. It's all priced in, Jeff. Everything's priced
yesterday
in.
Was just a really crappy day to report. I mean, I'm long Uber in a couple different ways. You wake up, it's the worst day in a month. There wasn't a damn thing they were going to do that would get out of it. But it's some days you just wake up and it's not going to matter.
Well, on that note, let's get this show on the road. We woke up to socialism and communism in New York, and it appears to be bullish for the stock market this morning, at least so far. So that's a little bit of a head scratcher, but okay. Welcome to Wall Street Beats. I'm Steve Lamar, joined by Kevin Bakes Baker and Jeff Macke. Today is November 5th. So with the topic of falling knives, Bakes, what are you thinking about the falling knife that is the NASDAQ in the past 24 hours? That looks like it's trying to bounce here. And I'm curious what you think of the levels, the technical levels on the S&P and the Qs, and where we need to start to get worried on the indices at large before we go into Jeff and his falling knives theme, which I think is a good one to start looking at.
This kind of plays into the names that I'm going to talk about. I can talk about it now, or we can go Jeff, and you can bring me back later. But we talked about this offline. SPY, I lamented to you before we got on, CNBC uses 1 day charts, and I think it's ridiculously misleading. Here's the SPY. We're obviously at 677. If you multiply by 10, it approximates the S&P 500 index itself. This is the SPY, the SPY, and frankly, nothing really matters until you get to 650. We could go to 650 and still do almost no technical damage. The volume's picked up a little, but it's not that alarming to me at all. Um, okay, Michael Burry doesn't like Nvidia. All right, I guess that matters, but it doesn't matter to me. I don't think it matters to the market this much. And then down here is 613 or 6130 if you're using the index, and that's coincidentally or maybe not where the 200 day sits. So 650, 613, those are stopping points. We'll see how
Those are
they
pretty far away.
that sounds like to me, and
Yeah.
and
Yeah.
if I'm going through, and I'm going to, there's literally 5,000 plus charts. They added 84 last month, so I mean I'm taking on a bigger and bigger job here, but if I'm going through all my charts, I'm not stopping on this one, frankly, as a long nor a short. So
Right.
to me, we're in the DMZ. Yes, we were overvalued, quote unquote. Too many people are talking about it being a bubble for it to really be one, in my opinion. And but you got plenty of play here before you really take on significant technical damage in the SPY and the Qs. I haven't looked at it in a while, but I bet you it's a very similar kind of thing. And sure enough, it is 583 on the Qs versus 621. That's a place where you could rest, and then the 200. I mean, now of course the SPY, the top of it looks a lot like the Qs, but there's this 542 or so is where that would come down. And if it slices through that on big volume, then I get concerned. But
Okay.
until then, I don't think that's likely, especially in the seasonally strong part of the year. I say, just pick your stocks,
Yep.
and don't use 1 day CNBC charts. It drives me bananas.
Well, the standard bearers here that have been driving this market, and it's been a select few, look like they're starting to crack. Jeff, what are you looking at on the retail side? I know Uber was a big one last night, and McDonald's was it this morning?
They were pretty good. They were decent. They did the things they were kind of supposed to do. Again, you just the upside is so capped on a lot of these consumer names. What I liked about Uber, I am long Uber. It's we're seeing a bifurcated economy now. To the extent you believe that, I think there's a certain amount of truth to it. I think it's certainly, it's at the high end. We're seeing great spending in luxury, and we're seeing the staples are getting murdered for a reason, lots of different reasons, but at the end of the day, what you have to know is people with money are spending money. People without money are taking jobs at Uber. So that's a pretty nice positioning for them. And they reported a quarter that very much reflects that. Also, tremendous management, generating cash, buying back shares. It was gorgeous. It was beautiful. Was I expecting it to kind of blow the doors off? No, of course not. Not on a day like yesterday. But I certainly wasn't expecting down 10%.
Yeah.
Called the daughter and said, "You missed this. I've been long this for a while," and said, "Here's one you can buy." The rest of them, not so much. We've seen a failed breakout in Walmart. I still love Walmart, but that got to 110 and just got scared for a lot of different reasons. But technically, sort of just we're right back in the morass of it. We're right back in the mix. Spotify, terrific quarter. Fantastic quarter. People just decided that they were going to puke on that anyway. And now all of a sudden it's kind of rolling over. Did a little technical damage yesterday for reasons that really it's maybe something was lost in the Swedish translation. It's you get a little Swedish chef kind of, but we're plowing money back into the business. They're saying smart things. They're
Yeah,
saying
I
exactly
love
what
when
you
you
wanted to
imitate
say.
Muppets. That really kind of makes it for me. No, not many people
Yeah.
do that. So
It's
God
better than
bless
my
you.
Bjorn Borg. I do the Swedish Chef much better than him, and I don't, I don't have a breadth of Swedish references, but it's a terrific company. It's a company been long. I loved everything they said, and it rolled right on over. So I'm watching the breakout on Amazon, like you said, Steve. Some of the old favorites have been showing a little sign of weakness. But that rotation into Amazon, I really need that breakout to stick. At least it should kind of continue going. They showed a lot of good stuff. They're clicking on all cylinders. Retail was fantastic for them. AWS obviously re-accelerated, and that's of course what's driving the stock. But from my perspective, it's the straw that stirs the drink. They get their cash from things like Prime. That's up double digits. Their online sales up double digits. To pull that kind of action off when you're the second largest retailer on earth, I
Yep.
know a lot of people don't follow this stuff, but that's pretty damn impressive. That's super great performance. We're starting to see a little more rationality. Kava reported last night the most obvious kind of weak results in the history of weak results after what we heard from Chipotle. It's like it's just a bad time to be selling bowls of slop. America's, the parade's gone by for that space. They were down quite a bit last night. They're coming back a little today. I mean, it's a little more rational to see them kind of going up. That it shouldn't be this easy. Dutch Brothers reporting tonight. I'm really curious to see the reaction on that. They crushed their last quarter. I mean, absolutely just smoked it. They're taking share. They're putting in objectively great numbers, and the stock is not doing a damn thing for them. Not really, anyway. I mean, it's again, they got up to 75 on genuinely terrific fundamental news, terrific performance, and it's done nothing but sell off since. And they're doing well. So, when you see Starbucks back near 52-week lows, it's Brian Nichols not a miracle worker. I mean, he's doing a good job. He's a smart guy with a tough job. Tough job involving.
What'd you think
turning
about that
things
China
around.
deal?
I thought it was
Good
great.
for the company,
Reducing
net
their
net?
exposure to China's fine. What's that?
I said
I mean,
good for the
it's
company, it looked like to me.
for sure. And that's really kind of the essence of what Nichols doing. He's got to mop it up. He's got to clean up. They have too many stores. I love that they're getting out of China in the big picture. Another one where I didn't expect that thing to explode. I was long it earlier this year and just decided life is way too short to fight crap like that. But it's at some point that stock's going to be a buy. He's a smart guy doing smart things. He left Chipotle. Chipotle seems just lost as hell. I mean, just they don't even know they're broken. It just a tragedy. But it's so for them not to bounce is one thing. But Nichols just kind of working a slow turnaround. People who were under the impression that you could turn 20,000 Starbucks and just turn them around quick were that's wrong. And so for them to reduce exposure in China makes a ton of sense. That's it's great. But again, it lost the 80s. It became a sell the news, which I get it. That's a cliche for a reason. But holy cow! It's if not reward the guy, at least don't hit him with a 5-iron for doing something that they've been trying to do for a while. What's the next step for them? I'm not so sure. But we've seen Nike's given up the ghost on the entire comeback that they were trying to make there. Deckers bounced for 4 seconds and then they took another 12% out of it immediately. These are stories that are pretty worn out in terms of gee, is Decker having a bad year? Well, yeah, we figured that out when it went from 220 to 80. That was the chart saying things might not be going great there. So to take another
Jeff, are the Olympics ever a catalyst for Nike?
They should be. It's when Nike's it actually becomes kind of funny. I mean, it's they reported after the last summer games, and they honestly spent about 15 minutes on the call talking about their ubiquity in Paris and what a great branding opportunity it was for them, and how they were just all over the place. And the stock was down 20% because they missed by 5 miles. I mean, just it's like I think you're missing the greater point there,
Talk
guys.
about lighting money on fire. Yeah, exactly.
And they're coming back into those chains right now. Dick's Sporting Goods should be the winner on that, because Nike wanting to get back in the stores as bad as they do and having the wherewithal still to kind of make that happen. They should get some shelf space. That's one of the reasons you've seen Deckers be so weak. One of the reasons On has been kind of performing pretty poorly. So and I don't think the consumer is that much of a disaster. But again, you stop paying 1 million Americans, it's going to show up, and that would be best if we stop. I think we get a pop on that news. But I mean, if you look at Staples right now, holy crap! I mean, they've just been terrible. And so you have this real two-prong economy. People with money are spending it, But there's just like this sword of Damocles that every trader on earth is trying to get in front of. And, we were talking about the cruise lines. It doesn't almost matter what they report. Carnival actually had terrific results, and they just hit 30, like the Titanic
What,
hit an
Ken?
iceberg, and man, they sunk immediately. And that started it off, and everyone who's opened their mouth in that space since has just been doomed. So, it not
What?
great price action.
Yeah. Did you see the McDonald's print? It looks like they're trading $20 burritos and bowls of slop for Big Macs. And
It's
the lower income consumers like down double digits, and the high end consumer at McDonald's is up double digits. So talk about
yeah, but you
decay.
know
There
what?
it is.
You also it's which works as a general theme, but also kind of good companies spend a lot less time whining about that. So because then you have Shake Shack that came out there and they said, you know what, we're actually a pretty good company, and what we're going to do is sell what the customer wants. And that gets, bringing it back to
Yeah.
Chipotle. They basically spent their entire conference call saying, no one has any money, so they've stopped eating food because they don't understand what a great value we are. Now, you know, I like a little more personal accountability for my CEOs than that.
Right.
It's they're not a ski resort. They're not entirely dependent on the weather getting cold and it's snowing. It's sell what people want. That's your main objective. And Starbucks, is trying to figure out what people want and how that fits in with what is going on. Chipotle actually is expanding their store openings, even though they're admitting that they're cannibalizing their existing store base and they have negative comps. So I compared it at stock market TV to watching someone cut off their finger as a weight loss technique. It's like, are you sure you thought this through? I'm not sure. We're just going to keep growing them, and eventually the customer will come back.
Yeah.
That's just
You mean they
kind of
don't grow
crazy
back?
talk. Yeah, yeah, that's not going to work. It's easy to bag on them, and God knows I love it. But the truth is, they are kind of, it's. I actually got in an extended debate with Grok yesterday, which was my first extended debate with Grok. It was kind of interesting, but just talking Target. I literally will talk Target with anybody, including an AI. But
Including Grok.
including Croc. But it's because they did, to the point of you see all these layoffs and everyone's blaming AI for it. Target themselves didn't even mention AI when they did their layoffs. They did a round of layoffs because they have way too many employees and they've run out of ideas. And it's they use AI because the workers sit around and they have AI write new resumes for them, and then they also
Right.
ask AI if Target's going to become Kohl's. And that's what Grok and I debated, whether or not Target was going to become Kohl's. And I would say that the new CEO has about 6 months before it becomes almost inevitable. It's really hard to pull those kind of generic retailers. Target
Mm.
was not a generic retailer for years, but they gave away a lot of their advantages, and they start to run out of cash. And once you start
Yep.
running out of cash, it becomes super hard to turn the ship. And so there's nothing distinctive about what they're doing. In terms of layoffs, it has nothing to do with AI. They need to get rid of people. And contrast that with Amazon, where that was the big talk. It's are they cost cutting? I was worried about the quarter before the quarter because they there was just a lot of layoffs and stuff that usually doesn't portend a great number. They posted a great number. They asked Jassy if he was cost cutting, and he said, no, we're just treating it like we want to be the world's biggest startup, which is just again, contrast your
Still.
leadership, right? Just
Right.
but it's hardcore. That's just a hardcore place
That's
to work,
crazy.
and a really good company. And so they're going to keep it lean, and they're going off in a lot of different directions. And it's the companies that have the wherewithal and the resources that are weathering what's a spotty, not terrible economy, but certainly there's the haves and have-nots out there in Consumerville, and the have-nots are really facing an uphill battle because there are a lot of initiatives to spend on. AI can do a lot of terrific things for these retailers if they can deploy it and if they can afford it, but not that many can afford it.
Right.
And you look at Lulu, our friends at Lulu. I was looking at that chart. That is a horrifying chart. I mean, just unbelievable. And there's a lot of different reasons why that is, but man, that's just been nothing but endless pain. And I don't want to catch that knife. I don't want to try to gut it out there. It's trading at what they think is 10 times or 12 times earnings next year. Problem being
Wow,
that
look at
they're
that chart.
going to reduce. I mean, it just right? The amount of
Yeah.
value that's been destroyed there has just been incredible. Since Chip Wilson wrote his letter to the Journal, which was very Chip Wilson, very harsh and smart, which is kind of by all accounts kind of Chip. He's not going
So
to
Jeff,
butter
with
you up
the
any.
with the first few stocks that you talked about this morning that you like, Spotify and Uber, were those dips you think about buying here? And Bakes, how
Uber,
do
I
those
think
look on the
Uber's
charts?
the one that I would buy. Spotify's got to get me back over that 200-day. Nothing good happens under the 200-day. Not to step on Bake's line, but
Yep.
that's been true for as long as there's been a 200-day. And they lost it yesterday. Do I think they deserve to? Nope. But that's why you have the chart, because maybe what you think doesn't have everything to do with what happens out there. So I want to see them recapture it. They figured to bounce. Uber didn't really do a lot of technical damage. I would love to see them break above 100 and stick. But that stock's been a pretty good performer. They turned in a quarter. The complaints on it were that they came in sort of mid-level on EBITDA. If you're an analyst and you're digging that deep for a reason why a stock would go down almost 10%, you're just pulling stuff out of your 5-hole. You're just making it
that
up.
was the narrative.
It's
They missed the EBITDA guidance. I mean, give me a break.
Yeah, shut up. I mean, exactly. We crush on every other level. We're going off in tons of directions. We got a foothold in autonomous where we're doing great. There's literally nothing wrong with the narrative.
No,
And if you're buying stocks because of their EBITDA estimate, man, you and I think about performance differently.
yeah,
Hey,
100%.
can I point something out on Uber?
Yeah,
And I got
Sure.
my phone up. I don't know if you can see it, but you said down 10%, and it was for a brief period of time, but it closed at the high of the day. Now it was still down 5, but someone was listening to Jeff Macke and saying, "I'm going to buy this stock at 92.34 and get it back up here." It's down, pocket change today, but when a stock takes it on the chin like that and then closes at the end of the day at the high of the day, I think that's pretty impressive.
that's constructive. Yeah.
Oh,
Yeah,
and by the
on a
way,
real slop day, you shook out a lot of weak hands there yesterday, and I like it. It's I don't know if anyone beyond my daughter
it just
listened
turned
in
green.
terms
By
of
the way,
me buying it, but yeah, yep, and love that, love that, and so
yeah. So
that is
I
constructive,
bet, I bet you.
and we. You think it's going to work out for me? You think You think my kid's gonna do okay on that one, Bakes?
Yeah, I like it. I like it. Who do they have? They just announced a partnership with somebody. Help me out.
Waymo?
They've got partner. No,
No,
they're
it'll come to me. But to me, this is why I like charts, because things tell me this is sort of like a bend don't break defense. Yeah, okay, yeah, I don't like and probably the algos didn't like the first 2 paragraphs of the press release, and then they go read
yeah.
through it and they say, okay, this isn't so bad, and I'm going to just stay in this base here in this consolidation, and I'm going to take out 101.99, I bet, before too long. So to me, in a lousy tape, that's okay action, in my opinion.
In a super lousy tape, I thought it was really good action, and I
Yeah.
was happy. Scored some points at least in terms of Dad's Christmas present with my daughter for getting her long that and picking up a couple points. And so it was good to see that type of price action. But again, it's a tough market to play hero. It's a really hard tape and really hard kind of economic situation to go out there and turn something around if it's not working. I love everything Uber's doing. I loved what they said. They're talking about distributing for retailers. They've got a ton of cars on the road. They've got a ton of people that are just making deliveries. Now, DoorDash reports, I think tonight or tomorrow, we'll see what they say. We'll see if they're having a similar kind of experience with their customers, but that's kind of Uber's sort of ne'er-do-well nephew or some sort of relationship. I mean, it's Uber's just playing a different game. They're so involved in food delivery, in retail delivery. They've got all kinds of partnerships out there. That could be what you're thinking of, Bakes. They're out there delivering product. no one but Amazon can really rival that in terms of the breadth of which, if they're just going to kind of put their software to work. And I consider them a consumer company because everything is a consumer company to me. But Uber has the technology to kind of really just think of it as a distribution system. And if a merchant has something to deliver, they're a great one to do the delivery for them.
Yeah, I was walking around New York last week, and I think I almost got run over at least 3 or 4 times by one of these guys on bikes delivering food to somebody. You gotta watch out when you're crossing the street in New York. They are everywhere.
And well, also when you listen to Uber, and Uber Eats is not an insignificant aspect, and so you try to reconcile that with what Kava is saying, what Chipotle is saying, these arguments that no one's going out to eat or spending money on food. That's just not the case. They're not
No,
spending money on
on
bowls of
their food.
slop. Taste
Exactly.
change, yeah, and so you got to sell what people want. And again, in our Ozempic world, 1,500 calorie bowls of garbage are not going to move off the shelves.
No,
Make something different.
exactly. All right, Bakes. What else do you want? What else do you want to talk about today?
Yeah, I'll move it along, but I appreciate being confused with Paul Tudor Jones, so I like that. That makes me happy with the 200 day.
Who did that?
We look alike. A few quick things. This plays into our top of the hour discussion. This is Palantir, okay, and I bring this up mainly for our members who watch CNBC. I watch CNBC, all the time. It's on behind me all the time. So here's before the print is 207, and oh my heavens, Palantir. Michael Burry has bought puts. The Big Short is bearish, and
And
Palantir
so's
is
Ben, by the way.
sorry.
And so's Ben. Ben's been short this for about a week and a
You know,
half.
Yeah.
and I listen. Is it highly valued, overvalued? Probably, but I just I just like people to kind of take a step back, take a deep breath, and when you look at the ticker going past, it's AI overvaluation concerns skyrocket and down 7% Palantir day. Okay, yeah, it goes down 7%. The stock has gone from 10 to 190. Okay, it's
Wee! It's
right.
like a
Yeah.
fun ride, Bakes.
I called it the Matterhorn. If you think that a stock that goes from 10 to 190, okay, and it was 207, all right, so now it's 184. This is standard operating procedure. Stocks pull back. It happens.
Right.
They pull back into support, and then Carp comes on and pumps his fist, and the retail guys say, "Give me some more PLTR." I just but the hysteria that surrounds a 7% pullback and now a 4% pullback. Spare me the rhetoric. Spare me the rhetoric. This is standard stuff. Could it go down a lot more? I suppose it could. Especially if earnings don't make stocks go up, what the hell will? I say that all the time. Yes, this could go lower, but this isn't. The bubble has been pricked by Michael Burry. Spare me. I don't
No.
buy it at all. Anyway,
100x EPS could easily be 200 for no apparent reason. Doesn't really matter.
yeah. All right, so there's my rant there. This is Boeing.
All right.
And this kind of surprised me because I kind of thought this was okay. They fixed all their problems, and the order book is monstrous, and their turnaround is firmly in place. Maybe not so much. Maybe not so much. I mean, this looks like it's really rolling over badly. This kind of looks like a Head and Shoulders within a bigger Head and Shoulders. Kind of like a Fabergé egg kind of thing. And I go, okay, I'm not going to stop on this chart and be a buyer. So I don't really know what's bad is going to happen to Boeing from here. Maybe it's the plane crash in Louisville. I mean, maybe that's the reason. I don't know. But again, as a chart guy, I kind of don't care. If the market is saying, there's 50 million fingers learning how to play, as ACDC would say, and they're playing on Bloomberg's, and all of that collective wisdom is saying Boeing's going lower, and if you own it, I would really question why you do.
Yeah.
All right, I go one more.
All right. One
and
more.
and Bob
And
isn't
all of
on
these
the.
bakes, I mean, all of these tie into this theme that Jeff started us out with. They just all look, these charts all look bad. They're falling knives everywhere. Just
Okay,
get out of the
and
way. Get off to the
it,
sidelines and let's watch for a while. See where
I,
this
I,
thing
I
lands.
And super hard time of the year to buy stuff like that. No one wants them on their books.
100%.
No one wants to say, you
100%.
know what? I put your money to work in Starbucks and I kept it there all year. That's not how you want to start your year-end letter to the partners, unless you really unless you had an awful lot of
yeah,
Palantir to make up
yeah.
for it, because it's sloppy out there, and
Dear
there's no
partners,
reason to think it.
dear partners,
Yeah,
our bowls of we own too many bowls of slop. We should have listened to
yeah.
Macke.
We got long bowls of slop, and we really thought that was going to turn around for us, and boy, we just rode it
I
right to the
particularly
ground.
like your Starbucks and Chipotle are like you broke up with a girl, you both put on 10 pounds, and now you're both in bad relationships.
Yeah, it's
That makes me happy.
they
That
probably
makes
should
me
have just
happy.
stayed together. That's only a guy who married the same woman twice, like me, probably would really enjoy that as much as I
Did he
did.
draw a cartoon to that?
It's
I
a
had a
tweet, I
cartoon
Jeff
believe.
for
draws a
last week.
cartoon to
Yeah,
that?
it was a tweet.
Yeah.
It was a
Okay.
doodle. It was a tweet. I don't know. I need
I
constant
didn't see
outlets.
it. All right, I'm
Well,
gonna go look.
we're gifted at Wall Street Beats with wordsmiths like Jeff. So a golf clap is in order, I think. Now, last, because it's funny that you brought this up, Steve, and we didn't talk about this last night and prior to the call, but I went through my hundreds of charts every night before I go through the 5,000 plus every month, and I go, okay, this is a good looking chart. What the hell's going on there? And I've been talking offline with Bob about this, and I guarantee, I suspect we'll talk about this a little bit more. I think this is the Jerry Jones play.
So for the visually impaired bakes, what is that chart?
Sorry. This is Comstock Resources, CRK,
Thank you.
and so you go through yesterday and you say everything's down. Well, no, not everything's down. All the charts look like crap. No, they don't. And all the volume is expanding on the downside. No, it's not. There aren't a lot of these, but my eyes are drawn to when you have something like an oil and gas company with oil still at 60, 61 and nat gas, around $4, looking like this.
And the
And people,
volume, look at that volume pickup. That's impressive.
So
Yep.
I'm no schoolboy, but I know what I like. And I like this chart, and I really like it above 2209, which is just, a buck 30 above where we are right now. I mean, that's pretty impressive.
Does Bob follow
resistance.
this? Does Bob know the name?
We've talked about it. I don't think he owns it. I don't think he likes the balance sheet. But I'm gonna, and I hope he's
What's going
listening,
on
and
here?
I'll talk about this with him again, because this is the kind of thing where, again, I listen to all of our competitors. I don't hear anybody talking about Comstock. I haven't liked oil for 4 years, and now there's something to do. And so when you act like this on a day like yesterday, relative strength 85, volume picking up, earnings that get applauded, and then you have follow through the next day, and you've got time to do some work and say, okay, I think the balance sheet is bad, but it's going to become less bad. And again, I don't know the whole Jerry Jones story, but he's been in the Wall Street Journal talking about the most enthusiastic nat gas find he's ever seen. And I believe this is Comstock Resources. That's his play. I'm really intrigued. And I wish I could own individual names, but for those that can, Comstock Resources is an oddball, in a unutilized or underutilized part of the market. Something good is going on with Comstock Resources, and you heard it here first.
All right. In a funky tape, that might be one worth looking at.
Yeah.
All right, boys, let's wrap it up. Thanks for joining us, everybody. Follow us on wallstreetbeats.com and on passes.com/wallstreetbeats. We will see you back here tomorrow. Thanks for joining us. Have a great day.
All right.
Thanks, guys.
Thank you. Thanks, Jen.